Are we seeing a real crypto pullback, or is this just simply a bullback? A bullback is where you buy every single dip because prices are going to be going higher. We'll discuss this and a whole lot more in today's show. We'll also talk about portfolio management and whether now is a good time to actually look to buy the dip to allocate into a portfolio for the last phase of the bull run. So smash the like button, hit the bell notification, and subscribe to the channel. Bulls ran out of a little bit of steam yesterday as they were attempting to reclaim the Monday high. I was updating, of course, the whale room members throughout every single bit of this move over here as prices were trying to reclaim the Monday high. We spoke about what we're looking for next. So if you're not in whale room, make sure that you do jump in there. There's a link in the description below. Let's have a look at what's going on in the markets over here. First and foremost, since it holds such a high market cap and it can dictate what happens next in the risk on asset markets, we'll look at gold, right? We spoke about this. We said we're looking for gold to potentially break this level, and we're calling for possibly a major local top, possibly even an all-time high for this part of the cycle on gold over there. And now you're starting to get that follow through, having printed the highs over there. Price came down, setting in a lower low, breaking structure, setting in another lower high. And now you're starting to form a trend, right? Multiple series of low lows and lower highs whilst breaking some very key levels over here. And we're starting to get that. So basically, when it comes to gold, any spikes up that you have over here and failure to get back inside this trading range in the form of a deviation would theoretically open up a short trade opportunity on gold. But the thing is, typically when gold is moving towards the downside, risk on assets do begin to rally. However, this is one big macro trade that's creating a lot of fear in the markets, and it's because of the US 30-year yields, right? And he says over here, Dario says, do you remember what happened the last time this went back above 5%? Well, the answer is the last time this went back above 5%, the markets did crash. That's where the stock market started to come down significantly. And I think that's one thing we need to pay attention to, right? Because the stock market, if you look over here at Finance a lot, he says, remember April 2025. And that's pretty much what happened as well when the 30-year yield started to spike. Everyone panicked over the death cross as the market bottom. Now the same people say a break above the 200-day is the start of a new bull market. Little do they know, crossing the 200 in a bear market is where you should be most afraid. So look, are we calling a bear market or anything like that? Absolutely not necessarily. We simply just traders on this channel. I don't pretend to be any kind of a macro analyst or anything with foresight 6, 12, 18, 24 months from now. We're simply just looking at the trades each and every single day independently and looking for the best opportunities. Now, this is still food for thought, right? As you do see the, of course, S&P 500 having put it in a massive rally. And oftentimes, if it is even a bear market, that first rally before the bear market truly does set in is oftentimes the biggest rally. That I can tell you for free, right? Almost a 22% move. So I guess what you're looking at over here is if the 10-year or if the 30 years do continue towards the upside above 5%, that could create a little bit of fear. But for now, at least the stock market is holding up, and following a big move like this, you would expect at the very, very least a consolidation and maybe even a little bit of a pullback. But as long as you're maintaining above that 200-day moving average for the stock market, it probably is okay, right? So anytime you experience big moves towards the downside followed by big moves towards the upside, there's going to be a bit of a whipsaw effect, right? Chop within the market. What's the whipsaw effect? Well, usually it does something like this, right? You tend to see the market whipsaw. You have a big move up, big move down, followed by another move up, and that whipsaws and then becomes a tighter and tighter consolidation, which essentially triangulates. You reach the apex and then you follow into the next major move. So that's what I'd be waiting for on the stock market. I wouldn't really rush into any positions. The DXY is something we've also been following over here. And if you look at this candle right over here, you can see that's been a perfect test now into the range low region, right? We deviate to that range low. Let's remind you of what happened the last time, right? Deviate to the range high. We identified the lower highs throughout, and then we said we're going to target the other side of the trading range. And now you've deviated pretty similar, the inverse of this, right? The inverse of this, where you started to put in, high, lower high, lower high. You put in a low, a high low, a high low, and you're starting to deviate. And if you zoom into that candle, well, that is looking like a proper back test. Now, it's not always 100% time inversely correlated to the risk on assets, but you can see there is a lot of shakiness within the market, right? A lot of highly emotional people, which of course are trading the markets. So this applies to both sides, right? Bears keep coming out of the woodworks every single time that prices start to drop slightly, and bulls are coming out of the woodworks as soon as prices move towards the upside. It's a very, very emotional market right now. So you need to look at all these things independently. That test over there, if this does lead into a spike towards the upside and you have continuation of the dollar, of course, that in alignment with the 30-year yields going over 5% does mean you want to take a little bit more of a cautious approach, which is why I wanted to address pretty much what the title is, right? The last crypto portfolio I'll ever buy. Urgent update, very urgent update, right? I think that a lot of people want portfolios. They want the portfolio list. I ask, how many coins are you currently holding in your crypto portfolio? 0, I just trade. That's 12% of you. I'm in this camp, by the way. I'm in this camp, and the reason why is because of all these various different things, and because we're reaching near the end of the bull market. Let's say we're at least 70 to 80% of the way through, and we have 33% of you holding 1 to 5 coins. I think that's pretty solid as well. Nothing wrong with that as long as you can manage actively those positions. 41% of you, however, are holding 6 to 20, which is quite a lot. That is a lot. The reason why it's a lot is because if the market does turn over when it's in a very precarious place like it is right now, then you're in trouble, right? How are you going to cut those 20 positions? Unless you have, everything opened on low leverage or something on Bybit, where you can click that close all button in one simultaneous click of a button, everything closes. And then you have 14% of you, which basically means that if you look at this number over here, we're sitting at 55% of you viewers right now are holding more than 6 coins in your portfolio. So I wouldn't necessarily say there's anything wrong with this. It just makes it very, very challenging for you to manage your portfolio actively as you reach that end phase. Remember, the swings become wilder towards the end phase. You start to see extreme moves both towards the up and the downside. And that's why we see like a lot of emotionality within the markets, within the comments. And this isn't only on my show. I watch other YouTubers as well, other big YouTubers. I mean, these guys almost want to stop streaming, as we get to the end phase because of the emotionality within the comments. So always saying, at least my approach is a more traders market, but this is also going to depend on how much money you have, right? Now, if you have 8, 9, 10 figure portfolio, I would highly recommend that you probably sit within, the camp of 0 to maybe 1 or 2 coins that you're managing actively. Of course, if you have $10,000, so like 5 figures or less, in that instance, it's probably okay to throw a flyer and you have 6 to 20 different positions and you're betting on the overall market moving towards the upside. And you have a couple of high risk plays over there, a couple of meme coins, AI agents, things that can really turn that into 6 figures or more, right? That's at least my approach. That's what I'm looking at. So we'll discuss, when I do allocate fully, what would I be allocating into? I will address that today. I'll give you possibly 4 or 5 coins that I would be interested in. Stay until the very, very end of the show, right? So liquidations, if we look over here, slightly skewed on the short side with 50.68% of the markets running shorts versus longs right now, as the market does slightly come down. And the last 24 hours, we have the majority of liquidations coming on the long side. 266 million have been liquidated off of that small move, right? So very quickly, the high time frame, where are we at, right? Well, the good news is that you still have the MACD crossing towards the upside. There is enough momentum over there to possibly send price higher. Remember, our at least targets that we're looking at, where we want to get very, very conservative for Bitcoin, is if it makes it to that $120,000 to $130,000 region. I'm not one of the people that are calling for 150, 200, 300K. We take it one step at a time. The reason why is because you're going to meet with triple bearish divergence when you do get to that level, right? That's important to focus on. If we look at ETH as well, MACD on the weekly also crossing towards the upside. So there is still some room for another move up, a little bit higher towards like $3,300, right? Daily exchange volume still rising over there, which is a good sign. Bitcoin on the daily, as we said, as long as it consolidates in this region over here, it can probably come down as low as about 99,300, but generally you want to hold this high volume area, right? As long as you consolidate within this region, the longer you hold up within the zone and consolidate between essentially $99,000 and these highs at 105, the more bullish it is to load up for a move that will break price through those high levels, right? So that is the daily time frame over there. But it is going to become increasingly difficult for bulls to maintain the momentum towards the upside in the daily timeframes, right? And the reason why is because you're currently caught below the RSI and you have a little bit of a swing failure pattern over here in the form of the wick that occurred on this candle over here, right? The 12th of May, which was Monday, you put in a big move towards the upside. Now, you'll see we'll talk a lot about the Monday trading range today. This has been the topic of the week. We look for the long trades by sweeping the Monday lows, and we got the beautiful long trades all the way up to the Monday highs. It played out absolutely perfect. But as of yesterday, many of these coins broke back below their Monday highs, but meaning back into the trading range and weren't able to get back above. And therefore, that opens up the short trade where you're looking for a lot of these coins to essentially sweep the Monday low. So that would look something like this, right? There's your Monday low and there is your Monday high. So highlighted in yellow. Maybe we'll change the color. Let's go to white over here so you don't get confused. So we have the white lines over there. It's marking out your Monday range. And then we have the yellow line, which is your RSI. And basically, Bitcoin has to get above the yellow line, which is $104,000 in order to keep that RSI trending up. So therefore, what this means, if the RSI keeps moving towards the downside, that leads to a reset. The reset can occur in the form of either a deeper pullback into this zone over here. So what would the deeper pullback be? Well, the deeper pullback would be still sweeping the Monday low. There it is. Possibly into this level over here where the order block is. That would be a sweep into, let's say, the middle of that is going to be $98,000. Or B, it could be a little bit more shallow, right? The more shallow approach would simply just be a little move underneath the Monday low, immediately reclaim, and that opens up the long trade, right? So that's what we're looking at over there. Anyway, let's continue. So BTC on the 4-hour time frame coming into that. Let's quickly go on the 4-hour. Excuse me. There we go. The 4-hour coming in for another test of the 50 EMA. Your 200 EMA is coming down a lot lower, all the way at $95,000. So one step at a time. I would say first major bounce zone would be coming in around $99,000. And if it doesn't hold that and sets in a lower high, then you can talk about these lower targets. As for ETH, you can see ETH is still trading a lot higher relative to Bitcoin in relation to its 50 EMA. Hasn't even come close to touching that yet. So we're also looking at a sweep of those low levels as a possible area of interest, right? So if we look at Bitcoin, we've seen a very, very good reset over here. Let's try and use this highlighter so you can see the reset over there in the funding rates have come down significantly. Look at this. The last time they went negative, this initiated that move towards the upside, right? And it's going to be the same on ETH. So if you do see price coming into key support in the form of sweeping the Monday low, that's really the plan of action. We want to see multiple coins sweep the Monday low. I'll bring those charts up in a minute. As soon as it sweeps the Monday low and you get negative funding over there, that becomes a golden opportunity to start to look for the long trade, right? And if we look at ETH, same story over here on ETH, right? Let's go to ETH. You can see the move was initiated over here. Negative funding over there, move goes all the way towards the upside. This is the equivalent of trading this from just under 1,800, so 1,780, all the way up to the highs over here, and now you're getting a reset. But bulls are a bit stronger on ETH than on Bitcoin, as we just mentioned. So liquidation levels, also slight liquidity underneath price action over here at 101,000 on the 12-hour zones. And then over the last 24 hours, we got a bit more on the top side over there, right? So what are we looking at, right? In the short term, this is really what I'm focusing on, is the USDT dominance chart. USDT dominance has been holding this range really, really well. And ultimately, if you do get a breakdown of this trading range towards the downside, we actually have a measured move. Remember, this is still more bearish than bullish. And if this is more bearish than bullish, this price action moving towards the downside means crypto moves towards the upside. So it's looking like a bit of a bear flag, right? There it is, bear flag on the 1-hour time frame. Price moves towards the downside, consolidates between these two levels. And ultimately, if you do get price pushing up and sweeping this level, that's the equivalent of sweeping the Monday high, which means your favorite altcoin will sweep the Monday low. And that's where you start to look for the opposite directional trade, which is going to be the long, right? Short on USDT dominance, long on your favorite altcoin, right? So if you look at the measured move over here, you can measure the move in terms of the rectangle, right? So if you clone that, where does it take you? The clone move takes you exactly into the yearly open, which has been the bias, right? The bias has been sweep the Monday lows, look for long trades into the Monday high. If it doesn't hold the Monday high, take your profits, which is what we did, right? If it holds the Monday high, look for continuation on your altcoins or Bitcoin or ETH or whatever it is that you're trading, all the way towards the yearly open. We know some of these coins have already hit their yearly open, such as 𝗬𝗎, for example, right? So if you get this move through all the way down to the yearly open, which is a downward move on USDT dominance, the alternative should happen, which is going to be an upward thrust all the way to the yearly open on your favorite altcoins, right? So I'm tracking this on a super low time frame, like the 5-minute time frame, because as soon as today, the trade opportunity could be valid. Remember, I will update all of you over here in Whale Room. Yesterday, I was like very, very, very hectic in the chats over here. You know, we're looking for the long trades, still hoping that price would hold. You know, got this trade over here, $50,000 in profits, had to close out over there. Couldn't ride it all the way towards the upside, but we actively trading the low time frames over here. So for those of you that are interested, that will be dropped over there. So again, basically the plan, I'm still interested mostly in Ethereum, right? We're looking for, if this move can sweep the Monday high over there, then we expect that ETH should sweep the low, right? So theoretically, the deviation of the Monday high on ETH over here, the swing failure creates the short trade, and we'd look to flip long at the bottom of the Monday low, which is this. I would love to see ETH come all the way down into the pink box over here. This is going to be major support, $2,320-ish, right? Give or take. So we need to observe this as a manual trade. There's no limit orders that I'm setting over here. This is a manual trade, which I'll take in the moment as price is coming into that, because I need to assess what price is doing as it sweeps each of these levels, right? So that is the general plan. I'm actually taking this account over here. I'm using ETH on spot, and I'm basically just using perpetual longs on Phoenix. For those of you that are following along, remember, you can still register and enter into the Phoenix Pizza Trading Carnival, where there's a whole lot of prizes up for grabs, right? You can trade your share of $45,000 from that prize pool. So use the link in the description below. Remember, also by signing up to Phoenix, you can use that user ID link. If you do decide to join over there, along with the ETH trade, you can join into Whale School, right? So that starts in 4 days. That will gain you access. Also, one more benefit of joining Whale School is for the first 500 of you that do that, once you finish the course, I'll personally be buying you a $15,000 Bitfunded account, right? So you can use that to trade with. All right, continuing on over here. So that is ETH, and we can go through the list, right? We can go through the list. It's going to be the same story on Bitcoin. I'm looking on the super low time frames. We're literally on the 5-minute chart over here. Remember, dailies, the bias is you're looking for still continuation higher and longs. And on the 5-minute time frame, we didn't get a proper sweep yet, right? Because you got your Monday low, you got your Monday high. This has not actually activated a trade on Bitcoin, whereas many others did, right? So we need to see the sweep of the Monday low. Sweep of the Monday low, we trade it back to the high, hold above the high over here, and you can start to target higher prices, right? Let's go to Solana. Solana provided some great trade opportunities on both the long and the short side. So remember, stops are over here, long trade on the sweep, reclaims, traded up to the high, deviation, close the long trade, and basically run it all the way back down to the bottom. Now you're looking for Solana to sweep the low, and then basically you can flip long once again. Let's look at 𝗬𝗎. Quickly looking at 𝗬𝗎. This is, again, guys, this is more for the short-term traders. So 𝗬𝗎 is already swept, right? Theoretically, you'd be looking for the long trade on 𝗬𝗎. However, you need to take context into consideration, right? What is the context? The context is, what is USDT dominance doing? So ideally, you have USDT dominance sweeping the Monday high, while maybe 𝗬𝗎 marks down a little bit further below the Monday low, and then that provides the trade opportunity, right? Then you start to look for the long trade. But if you're trading this independently, theoretically, if 𝗬𝗎 starts to reclaim the trading range over here, stop loss goes over there, entry on the reclaim, and where do you target? I guess in this instance, you can target firstly to the yearly open, and secondly to the Monday high, right? So these are short-term trade ideas. If you're a swing trader, this is not for you. If you're a swing trader, the message for you is basically to wait for retests of some of these EMAs, and you can look for signs of strength over there to get an opportunity back in. Okay, low time frame traders. Anyway, let's go back to what I said, right? What are the coins that I'd be interested in? So I'll give it to you straight, very, very quick. The coins that have shown promise and signs of strength and line up with some sort of a fundamental potential are going to be the following. These would be the ones I'd be interested if I were to be holding a portfolio, right, of, let's say, 5 coins. Okay, BTC obviously is going to be one. Where do you gain your entry? Again, I'd be looking for the entries now on the sweep of these Monday lows. Secondly, what's the next one? Ethereum is going to be the next one that I'll be looking at. Same thing, sweep of the Monday low, look for your entry. Next one, Solana. I'd look at Solana as the third coin in the portfolio. Sweep of the Monday low, which you're getting close to. Sui, we're already sweeping the Monday low. That's the next one. And then Sonic, I'll give you one more. There's one more that I have interest in. Sonic is the other one. If you can start to reclaim the Monday low over here, that opens up the long trade as well. And remember, a lot of these swing trades, when I take them at least, start off as a scalp, basically. I'm looking for short-term trade opportunities. All I want to do is this, right? When we highlighted this trade over here, we're looking for the sweep, get back inside the Monday range. You know, you take the trade and you're looking to trade it to the Monday high. That's a short-term trade idea. If it holds above here, you'd allow the price to continue to squeeze towards the upside and you keep holding that trade. And before you know it, you have a swing trade on your hands, right? And then basically you can just leave that trade open for higher. So that is the way that I'd be playing the market. And the sixth coin that I'd be looking at is Hyperliquid. Hyperliquid is the next one. This one's got quite a wide range. You can see over there, it didn't actually sweep the Monday low yet, but you got the move all the way up to the Monday high, swept the Monday high, theoretically opens up the short trade towards the yearly open, possibly even below the Monday low. If you sweep the Monday low, get back inside, there's your long trade, right? Take the long, stop loss goes underneath those little low-hanging wicks, and then you can start to trade this much higher up. That is essentially the plan of action. So BTC, Ethereum, Solana, Sui, Sonic, Hyperliquid, those are the 6 coins if I were to purchase coins for a portfolio, but I want to be absolutely crystal clear. My plan of action for the remainder of the cycle, which is this, let's quickly highlight again, the remainder of the cycle, I don't want to be holding massive portfolios. I just want to trade the market that's in front of me because it's more and more risky as you move into this final phase of the bull market, right? So if you want to learn more about that, guys, just come to Whale School. I can elaborate on all of these different things. And there's a lot of information out there for you. Remember, there's also the daily candle for those of you that do want that. There's a link in the description below to newsletters. Tons and tons of free resources out there. Take each trade as it comes, one step at a time, right? So in summary, what I would say is that your bias should be formed by what the USDT dominance is doing, right? The USDT dominance is our own form of liquidity alongside the daily exchange volume. The daily exchange volume can help you to identify the broader trend of the market. Think of this like the M2 money supply for the stock market. If the daily exchange volume is rising towards the upside, generally that's like the M2 money supply expanding, which pushes stocks towards the upside, right? This gives our crypto market a little bit of liquidity. And then for your more timely entries, you can use things like the USDT dominance, right? So I hope that helps. That's it from me, folks. I hope you all have an absolutely great day. For the rest of you, I'll see you in Whale Room. I know that I absolutely smashed you with a massive amount of messages yesterday for those of you that are in there, but there's a lot going on in the market. So let's see if we can get the entries later on today. I'll catch you all on the next one. I hope you have a great day and cheers for now.